Hey everyone, welcome back to Corporate Decoder, the place where we dig through the documents so you don't have to. Today we're looking at a proxy statement from Ring Energy, a company that drills for oil and gas. And while I can't promise any buried treasure, we're definitely going to unearth some interesting nuggets about where this company's headed. It's like an Easter egg hunt, but with financial reports. So what's this proxy statement all about? Well, it's basically Ring Energy asking its shareholders to vote on some important things, like who should be on the board of directors, how much the top executive should be paid, and a few other key decisions. It's a peek behind the curtain, giving us regular folks a say in how the company is run. Let's get started. First, mark your calendars. The annual meeting is scheduled for May 22nd. The main things shareholders are being asked to vote on include electing 7 directors to the board, giving an advisory opinion on executive compensation, increasing the number of shares available under their incentive plan, and ratifying the appointment of their accounting firm. Let's take a look at the core of the company. Ring Energy's mission is all about making money for its shareholders by finding, developing and selling oil and natural gas. But they also stress doing it safely, responsibly and with honesty. Their vision boils down to a few key things: safety and environmental responsibility, generating cash flow, being smart with their investments, cutting costs and strengthening their balance sheet by paying down debt. Now let's dig into some numbers. Their daily sales of oil and gas grew 8% over the year before, and daily oil sales specifically were up 6%. That's the good news. They managed to keep their operating costs under control, which helped them generate adjusted earnings of $233, but spent less money doing it. This shows they're getting better at managing their capital. They also paid down $40 million in debt and added to their proven reserves. They're also looking to grow through acquisitions. They recently closed a deal to buy some acreage from a company called Lime Rock, which ideally suits Ring's focus on assets, with shallow declines and undeveloped inventory. Moving on, let's check out the folks who are running the show, the board of directors. It's currently made up of 7 people, 6 men and 1 woman, and 6 of them are considered independent. The board has 3 main committees: an audit committee to oversee the finances, a compensation committee to decide how much the executives get paid, and a nominating committee to find and recommend new board members. The lead independent director, Anthony Petrelli, has a long history in the financial services industry. Then there's Paul McKinney, who is both the chairman of the board and the CEO and has a strong background in petroleum engineering. There's also John Crum, Richard Harris and Thomas Mitchell, all with significant experience in the energy and finance sectors. And David Habaki, who has a background in private equity. The executives include Alexander Dyes, Chief Operations Officer, Travis Thomas, Chief Financial Officer, and Philip Feiner, General Counsel. Let's get into how the company compensates its executives. Base salaries are reviewed each year, and there were increases to some of the salaries in early 2024 to be more in line with their peers. Bonuses are tied to performance, with goals set for things like production levels, internal rate of return, and keeping costs down. For 2024, executives earned bonuses at 136% of their target because the company did well. Also in 2024, the committee granted equity awards, a mix of performance and service-based restricted stock units, a move consistent with their pay-for-performance philosophy. As required, the company disclosed the pay ratio of the CEO to the median employee, which came out to 23:1. It's important to have this information out in the open, but keep in mind it is for historical reasons and does not necessarily mean it is something that will be replicated in the future. Now let's check out who owns the most shares of Ring Energy. As of April 4, Warburg Pincus & Company is the biggest shareholder with 14.0% of the Obasant, and BlackRock, the massive investment firm, holds 5.3%. Finally, the shareholders are being asked to approve the appointment of Grant Thornton as the company's independent auditor. The audit committee is responsible for making sure the auditors are doing a good job. For 2024, Grant Thornton billed the company about $624. Grant Thornton billed the company about $627,000 for their services. That's the overview of the key points. As now for my take on Ring Energy. Tad, it's clear they're focused on growing production and keeping costs down. And they have some good assets in the Permian Basin. Their focus on paying down debt is definitely a plus for long-term financial stability. However, like any oil and gas company, Ring Energy faces risks from fluctuating oil prices and environmental regulations. Their success depends heavily on their ability to manage those risks and adapt to changing market conditions. So the recent drop in oil prices is definitely something to keep an eye on. Management seems to have this well in hand though, and stated that they will be reducing capital spending to allocate more resources to paying down debt. Overall, Ring Energy appears to be a company with a clear strategy, but they operate in a volatile industry. It will be interesting to see how they navigate the challenges and opportunities in the years to come. Thanks for watching. If you found this helpful, please like, comment and subscribe.